Hey, everybody, welcome back to STRonomics. We're going to be talking about should you stay or should you go now? Honestly, Kenny, should I buy or should I wait for the rate decreases that are allegedly coming in September and another one in December?
Nope, you should never wait. That's just like flat out. I have spent so much time in my limited investment career of all different types of asset classes, stocks, cryptocurrency, real estate, waiting for the
You
right
invest into
moment.
crypto?
I did. I actually made a lot of money from
I
crypto.
am so fucking done. You and Tom Brady.
You well, it was funny. I bought Bitcoin when it was like 3,000 dollars for a Bitcoin. I bought it like during COVID and I was like, yeah, it'll bounce back. And then it's shot off. So anyway,
What is it worth today? I don't even know.
that's a good question. Let me look at it. I stopped watching because it got too like volatile for me to watch. And I was just a long term. Oh, 55,000. So 55,000 a
Yeah,
coin.
too bad you don't own it.
Oh, I still own it.
Oh, you do? Okay, gotcha.
Yeah, I didn't sell it.
Nice.
So, the plan was I bought the Richard Furtick package. He said, "Set it and forget it." And I was like,
Oh
"Alright."
God. Set and forget it, and don't worry about never getting a distribution. I didn't say that. So let's talk about buying. I think a lot of people have been waiting on the sidelines. We all know that, waiting for rate decreases. It's pretty evident, at least from popular opinion, that there's going to be a quarter point rate decrease coming in about a month in September, but that's not 100% given, right? I'm a believer that when that quarter point hits and the majority of traditional mortgages, even second home investment loans, are going to be under 7%, we're going to see the market get flooded by probably a couple of million people coming. And I'm not just talking short term rentals, like all across the board, but we also don't know that that's going to happen. That's going to make it way more competitive. We still don't have enough supply, Kenny. I get that there are thousands of STRs available in, the Panhandle and Orlando and the Smokies and that type of stuff. But there's still not going to be enough supply to be able to handle that. So I think if you're a seller, I mean, you still should be listed, but you should probably stay steadfast on your pricing because I think you'll have a better opportunity in the fall. If you're a buyer, like you said, you should always buy immediately. I mean, believe me, I have contemplated, I've been under contract for 6 weeks on a $3 million property, the largest I've ever purchased as a single family home. I am nervous about it and I'm doing a DSCR, so I'm locked in, right? I can't refi. I won't be able to refi unless I want to spend on a 3-year prepayment penalty $90,000, at 1% a year to refi in December.
Brennan didn't waive the prepayment penalty.
Impossible.
Impossible.
She got it from 5 to 3. Well, dude, when you're doing loan value over 2 million and you're zoned agriculture and you're in Montana, there's a lot of things. Honestly, I'll tell you this. I'm actually going to put Brent on a podcast when we get closed tomorrow. Not tomorrow, but in the next few days. I don't know that there's any. She went to heaven and earth to get this done. I don't think there's anybody else that could have gotten me closed than Brenna Carls on a DSCR, to be honest with you. It's the most challenging thing I've tried to purchase. But anyways, that's not the point of this. But I am going to be locked in at whatever. I'm right around 7.5% for 3 years. I'm not going to pay $30,000 a year to refi, unless it dropped down to like five and I was going to have a $3,000 a month delta. I mean, my payment's going to be $17,000 after I put 650 grand down. Right. So it's a big investment. I think most people are afraid right now because they think the interest rates are too high. This still, you did the underwriting on this. You know what you projected for revenue. The math does not work in most standard cases for this purchase, but I believe it does work for what I'm going to do with it. And you know what I'm going to do. A handful of people do know, but anyways, so I believe I'm with you 100%. I think you need to buy when you see the good deal. You underwrite at 7%, 6.75, 7.75 if the performer works, then you move forward with it. If it doesn't, then the rate reduction is gravy, right? So I mean, what if you go in at 7.5% today? And then you could go get 6.5 in January if there is two rate reductions, right? So you go down 1%. If you're on a $600,000 loan, does that make sense? So I think what you have to determine is how fast do you want the payback on the cost the delta, the additional cash flow that you're going to make, and the cost of that refinance. And I don't think a lot of people look at it that way, except for the savvy investors. And most refis are going to be 3,000 to 5,000 bucks, right? So let's just say it's 4,000. If you can save 300 bucks a month and it costs you 4,000, that's a good investment to refi, in my opinion. You're going to get that return in less than 24 months. So it's really good cash on cash.
So for me, it's like for looking for opportunities because I've started to look again to acquire. And
You're going to make a purchase?
yeah, I'm gonna have to. Ryan's people were like, "Yeah, you're gonna need to cost seg something." So I was like, "All right."
So you're buying
Um,
for tax purposes.
there you
Hmm.
go, buying for tax purposes. So that's why we do it, right? Just kidding. So if the numbers make sense, the numbers make sense. I don't like I just I understand the attractiveness of getting a lower interest rate, lower like monthly payment, lower like risk from a debt service standpoint. But if you had a good opportunity in front of you, like why would you take it just because like, oh well in the future the interest rates are going to be lower, therefore like you're just passing by an opportunity. So I'm always looking at it from like an opportunity standpoint. Like I'm not, if I'm looking today, I'm going to hunt for deals. And if something makes sense with the current interest rates, with everything given the current environment and stuff, and I still really feel really good about the deal, why would I pass up on the deal? Because
Agreed.
the reality is the whole thing of like timing and revenue and all this stuff, like you're just passing, time waiting for the best interest rate and the best dollar amount to get into the game. That's opportunity cost right there.
Look at Let's just use the Smokies as an example. I texted with Madeline. God, what is there, like 1,300, 1,400 properties available on the market, I think, in the Smokies right now, where it was like two or 300 at this time last year or some ridiculous number. It's like 5 or 10x. Don't hold me to those numbers. I don't know exactly. But you look at that typical $700,000 property in Wares Valley or wherever in the Smokies, Pigeon Forge, Gatlinburg, wherever, that's been sitting on the market for 45, 50, 60 days right now, that where you can probably negotiate down or negotiate a bigger seller credit, like maybe 50,000, 60,000. So let's say the basis is really going to be 650. I mean, if interest rates drop down to around 6 in December, that price is probably going to go up to 750 to 775. It'll probably be pulled off the market. Demand will increase and then pricing is going to go up. Or you at least will not have as much of an ability as it flips to a seller's market to be able to negotiate. And you think about that, if it's 50 or $100,000 delta versus 1%, it makes sense to buy now at a lower price point and a higher interest rate and then go in and refi later than it does to wait and potentially have prices go back up.
Right. Well, it's just like buying, like when everyone's selling, you buy. When everyone's buying, you sell. Like,
100%.
but people are afraid. It's like, well, everyone else isn't doing it. And you're like, there must be a problem. And I don't know, we go through these like cycles throughout, even like the small ones. We can see them and it's like, okay, everybody's selling or everyone's buying. And we just chase. We continue to chase and follow the herd. You're never going to hit your goals, like your investment goals and that freedom that you want, if you're just going to continue to chase and follow the herd everywhere you go. I mean, unless you're just doing it for, hey, I want a house in the Smokies. I mean, I personally just wouldn't buy there, but so like, yeah. So, bold statement alert. But
Oh my
anyway,
God. The hate mail is going to be in early tomorrow morning. Well, whenever this is released.
I talked to an agent. They are literally building. I got like, I think it's like 200 or 300 new builds that they're building right now, and they're gonna try to sell them. Like he's like got the contract with the builder to try to sell them, and I'm like,
Man, that is the first telltale sign to not invest into a market. When you see, like, especially build STR,
yeah,
Branson, Smokies, Gulf Shores, Alabama, Orlando, that type of stuff. For those of you that use a term that doesn't exist, oversaturated, that's when you know something is starting to get oversaturated.
yeah. And if you don't have the right property in the right place and the right all that, you're just and then if you buy those cookie cutter ones, it's the same song and dance. So
It goes
I
to
mean,
Penny.
I
Remember our
just I
podcast
skip
a
the
couple of months
trouble.
ago about the 15 bedroom that we were looking at the mastermind meeting in Orlando, and there was like 3, and now there's like 25 or 30 15 bedrooms a year later?
I think there's like 60 or
That
70.
doesn't
It's
surprise me.
insane. Yeah, no, I mean, like, I remember 2 years ago, I was like, "Man, the 8, 9 bedrooms." are killing it down there. And now, like,
Now that's like having a 3-bedroom in the Smokies.
now they're yeah, they're literally like I was looking at a 9-bedroom today that was gonna like gross $110,000 in 1 year. $110,000 for a 9-bedroom $1 million property. Like pimped out, all the amenities, like super themed, like engineers, all that good stuff. $110,000. That disgusts me a little bit. You know what I
But the
mean?
9
Like,
bedrooms and 2,600 square feet, and the bedrooms are all 9 by 9.
yeah, yeah, there you go. No. Yeah, I mean, it was nice. It was one of those nicer neighborhoods. That was cool like a year ago. So, it's just it's challenging that some of these markets have just gotten so competitive and like there's continually to build and build and build better. It's like, oh, well, this is the best today, but is it going to be the best tomorrow? Probably not. So we
Agreed.
have to be careful there. So, I mean, should you buy now on those or wait? I would definitely wait if I was dead set on buying in a market like that. But overall, though, going back to it, I think finding the opportunities, constantly looking, it's just don't wait.
I think there's one thing that you and I are 100% unified on, Kenny, and it's that you need to be looking every day, at least 2 or 3 days a week. You need to be underwriting properties every single week. You need to be working the deals, right? You can't just wait till, "Oh, hey, I'm gonna be ready in 2 months. That's when I'm gonna start looking. That's when I'm getting into buy mode."
You
And if
forgot
you
one.
find that deal, pull the trigger.
Yeah, you forgot. We also are unified that we hate Logan,
I've
Ohio.
never said that. I love
You
Logan,
never said
Ohio. I
that.
love
Oh,
the sod farms.
yeah.
I would totally go up there and build a tiny home community on the sod farms that they have up there.
You and everybody else is building a tiny home community on the sod farms up there.
I'm joking. Look, I've never been to Logan, Ohio. Someday, I promise all of you that own in Hocking Hill and Logan, I will get Kenny there. We will do a live podcast from Logan, Ohio, and you can throw whatever you want to throw at him.
You can come meet up with us. We'll go to one of those tiny
But you
homes.
know what? What you bring up, Kenny, about like the build to suit and the 15 bedrooms and the cookie cutter stuff. Branson's doing it. All the major places are doing it, right? And it kind of goes back to when the reason that we joke about Logan, Ohio is that was on your very first spreadsheet well before SDR Insights existed when we were in Gatlinburg at the mastermind meeting. And it was number one, at that time, but it did not have the traffic drivers to sustain after COVID. And I think that's one of the problems that people look at is I think a lot of people still live in the COVID area. I think there's a lot of sellers that think they can still sell at COVID pricing. I think there's agents that think they can get COVID pricing. I think there's people that think they can still drive, COVID pricing with their rentals. I'm going to tell you that in 2021, I did $351,000 at Dragonfly. And I'm going to be happy if I can do that about $80,000 less this year, but I'm still at the top of the market, right? And that's just the reality. And if I had data and went back, it's probably a $250,000 property in 2018 and 19. And I think that that's the reality. So we need to be looking at making purchases based off of post COVID numbers or 2018, 2019 numbers. Scratch out 20, 21, 22.
I'm going to say something that shouldn't be controversial, but it's
Oh, God.
controversial.
There we go.
Ready? Buckle up, everybody. So, I mean, everyone, you should agree with this. Like, everyone should agree with it. Like, what if some of these markets weren't like the people going to these markets aren't a fit for the high end luxury type properties that they're just building out the wazoo? Like when you think about it, like Logan, Ohio, great example. Okay. Who the heck goes? It's a state. I get it. It's a popular state park, biggest state park in Ohio. Please don't come at me with you don't know anything about Logan. I do. Okay. I've researched it a lot. So, but come on, guys.
You've never been there, Kenny. You don't know anything about it.
Yeah, you're right. I haven't been there, but I know a lot of stuff about it. But I mean, seriously, it's in Ohio. It's a drive-in market. And if you've been, people who are defending it, if you've been to other Ohio state parks, it's just a bunch of rednecks that go there. Now, I know that Columbus
Now
is
you're getting the
growing.
hate mail.
Yeah, now I get the hate mail, but I know there's Columbus is growing and all that great stuff. And it's not just rednecks that go to Logan, but like think about the general population that travels to these types of markets. Think about the general demographic. We are coming into these vacation markets now. And I'm picking on Logan because I don't want to pick on some of these other big ones, but it's true. This is not just a Logan issue.
Same thing in Hot Springs, Arkansas.
Yep. The Smokies. Okay. Sure. There are some wealthy people that go to the Smokies and visit the Smokies. but is it every single person that goes
The
to the
problem
Smokies?
is what I hear you saying, Kenny, is that these markets that are typically middle class incomers that make up the majority of the visitor demographic are now those markets are being saturated by what people think are super properties, and they're building too big in luxury properties for the market, and that's what's driving price down because
And
it's always
size.
supply and demand.
Size too. You're gonna have these that's why you have these 12-bedroom properties in the Smokies that are priced the same as 5-bedroom
Yep.
properties.
That's why
So
I built a 12 bedroom on a place that it doesn't exist.
yep.
Doesn't exist, and, like, nobody in my world invests there, so I will be alone for quite some time on this place with this large property.
And I'm really not trying to pick on any of these markets, guys listening. Like, I'm not trying to say like, oh, just the Smokies or Logan or I mean, it's Orlando. I think was the first one I really started to saw a big
It's really everywhere that
demo
has been a top destination market in the STR space. It's
where
happening
they
over
can build.
Yeah.
That's the thing where they can build these like whatever they want
Like
wherever they
Gulf
want.
Shores, Kenny, the cottages, remember that Lori and Emil and I bought way
Yep.
back in 2020, and I exited in about 60 days, but there's been over 400 of those built in the last 2 years. Just in the last 2 years by one builder, Zach Cordova, over 400. There's like 7 to 800 that have been built in total. That is what is happening, with every single market. So it's not it's Gulf Shores, it's Destin, it's the Smokies, it's everywhere, right? That's a big market. It's happening.
Yeah. 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 But I mean, even in the beach markets though, there's limited real estate there, right? Like, sure, you can like build the same exact thing, just like the condos, but there's still limited real estate. In some of these other markets, they're just sprawling out, and they're convincing people that you need to buy. I mean, we saw a huge crash in Blue Ridge market with this, where there's building everywhere and there's not a lot of traffic drivers, and the demand, and that's why that market took a 30% dip last year. So it's one of those things where it's like you gotta be careful and know and look at how the market's going to perform in the future and what they're doing in the market. Are you familiar with those things? Are you familiar what's going on in the market and the growth that it's having, or are you just looking at a property in a cool neighborhood?
And that's really where the submarkets, and you preach this all the time, is bedroom count, bedroom count, bedroom count. You will have different saturation levels based on bedroom count and even that location. The one thing about the Smokies is it will always have the traffic drivers, right?
Yeah, it
So
will.
if you can get close to the traffic drivers, if you can still, it's just all location,
Use
proximity,
yeah,
use,
speed.
uniqueness. That will always, those will be all the basics are the things that you always have to, you cannot compromise on those, period. So write that down. I will never fucking compromise the basics. Proximity, location, submarket, views, all of those things are absolutely critical. Anybody can do hot tubs, mod pools, design, all that other stuff.
Yep. In fact, people are copying designs.
100%.
Did you see, you saw I know like a Sheeta from North Carolina? She was complaining about a designer had copied literally like same colors, like even the style, everything, like even the bedspread and the stuff was exactly the same as
She
one of the
shouldn't be
properties she
complaining,
did.
she should take that as a compliment. None of that's trademarked, so you know what, Ashita,
Sure.
that means that you did a great job, and you know what? That's why Bree and I share all of our designs, and we even give all of the products away so people can copy it and do it. So
Yeah,
that's the
if it works, it works.
biggest sign of flattery.
It is, but that can't be your moat. That can't be the thing that separates you from everybody else for the long term. Maybe a
That's
year
the
or 2.
problem. Everybody's trying to do it with design, and they're spending way too much money. They're over investing into design, and anybody can come in and do it. The secret, folks, in design is getting to the precipice, doing everything that you need to do and not one penny more. That's how you build a fucking super property. It's not going and buying a $600,000 property and putting $300,000 worth of design into it. It's doing it in 75,000. That's how you build a super property that will outperform everything else in the market from a return on investment profit. That's all that matters.
Yeah, I love it. And designing it to highlight the moat, the thing that separates you from everybody else, right? Like you're
Insulation. Kenny
emphasizing your
uses moat.
market.
I use insulation. We're speaking the same language. We just say it differently.
Insulate the moat
There you go. You need insulation around your moat.
around the moat. There you go,
100%.
your moat. Anyway,
Awesome. Thanks for joining us, everybody. We'll see you guys on the next episode, or we will see you on the recordings of the STR Scale Summit Or Kenny and I will see you in the Poconos on the 24th of August, depending on when you watch or listen to this. Or Kenny and I will see you on the 24th of September at my one day boot camp in New York City. Peace out, everybody.